Hi guys, welcome to the Saving Money Show with me, your host Sean. I apologise for the noise. We are outside. There's a lot of wind around, and not just mine. But we're going to talk about Tesla, Apple and GEVO, if we get time for it. We're going to start with Apple. I'm not going to be pulling up charts because that's not what this is about. Right. Basically, the thing behind Apple and Tesla is the same thing. You've got to ask yourself, has any new news come out on this run up? For Apple, it's settled. It didn't bring out a new iPhone. It came out with great profits, a great earnings report, and it settled around late 300s, $400 share. Now it's near $500 and still rising because of the share split. Nothing has changed. The share split doesn't add any value to the company, but why? And then you've got Tesla. Had the earnings, it ran up, then it came down, and I got a load of abuse for selling a couple of my shares in Tesla at $17.85 and then buying it back at $1,400 and more with a profit. And looking at it as a business. These are businesses. We are supposed to look at it as a business. We can look at it as a speculative business. We can love the business, but we are supposed to look at it as a business. And if we think it's going up too quick and there's going to be a pullback, we can sell some of our shares. If you start criticising people, anyone in it is going to sell their shares and go into another stock. But I've got a thick skin. My skin is so thick, I've got 2 layers of it. Anyway, let's get on with the show. What has happened? As Jeremy has said, and you know Jeremy is the biggest bull in the Tesla market, and I think he's right this time. You have so many retail investors looking for a quick buck going into Apple and Tesla, knowing that once the split happens, knowing you're going to get investors running it up pre-split, and once the split happens you will have a bigger run up and they will come out of it before they do. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Saving Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of offers. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all 3. Anyway, on with the show. Sorry about that. So Tesla has been running up because the investors have been going in. And what does that mean? It means, if, as you said, if Amazon announces a split, that will go to 4,000. But I got criticised for 2010 selling a couple of my Amazon Tesla stock, picking up 1.5 Amazon stock, and then when Tesla dipped, buying another stock of Tesla. So, you know, I think I've done well. However, you've got people criticising, saying you're silly to sell pre-split. We can follow the charts and we can see these things are going to happen. I said when it was pre-1900, if it breaks through 1950, it will shoot up. It did, and that's why I set a price target then of 2010. And I knew once it shot up that much, it would come back down, and it did. And then it shot up again, and that's fine. But you have to realise the reason why. These people going in, what they're doing is they are making it so high that they're factoring in the next 5 to 7 years growth. They are factoring in the S&P inclusion. People are saying wait till it gets included in the S&P. It's already factored in. Most of the news about the battery day is factored in. Unless Elon Musk comes out with some surprise like robo taxis here in the next 12 months or in the next 6 months, or people are expecting a 1,000,000 mile battery. If anything, it could dip on battery day because they're expecting such good news to come out that if we don't get a perfect one, it could end up dipping the stock. Look what happened with earnings. We had great earnings. We had a short rise up and then it dipped. Now we have the fact that I do think Tesla is the future. I do think in 10 years this stock will 10, 20 or 30x, but it's not going to be an easy ride. It's going to be highly volatile. Tesla always is. It will be up and down. Now the shares I have there now I'm keeping, and I will not sell unless I need the money. But bear in mind kind of people who are invested at the moment. You have the long time Tesla fans, long time Tesla shareholders. You have ones in from the beginning, but to tell the truth, they only held it up to $200, $300 a share. With them, it didn't go above there. Then you had the traders, the ones like me, who got in early and are trading it. They want to hold some long term, but they want to minimise their risk when it hits the highs and then buy back in when it's low. Now, we don't buy and sell enough to change the price, but you have those. You have the funds. More and more funds are going in. You know, of course we know about ARK Invest, but then there's other funds going in as well. Like Vanguard are preparing to go in and scoop up a lot of them. They've probably started buying already. Pre-split. Now, you have, as I said, the retail investors. Now, post split, once the split has had a run up, they need to move money around quickly, these guys. So once Apple, and the thing is, Apple and Tesla are doing it at the same time. So once they have had their post split run up, you can expect them to sell off. That's a lot of money they're going to sell off. On top of that, you have the people who are covering their shorts. Now, these guys have put a lot of money in, buying at higher prices to cover their shorts. Once their shorts have expired, once they've covered it, they will sell off. They will take the loss and sell off. Because they're not Tesla bulls. They don't believe in Tesla. You have someone who is a Tesla bull from the beginning, who, when it was $200, said it would go to $1,000, gave it one of the highest prices any analyst gave it. Is now giving it one of the lowest prices any analyst will give it, because he thinks it's not going to be an easy run from here. I think there's plenty of things that Tesla can do. Now, I have been saying for months that Elon Musk should float more shares on the market. It'll do a number of things. When I said it, he only had to float dilute 5 to 10%. Now it would be 3%, 5% max. I would float 5%. Firstly, it would really hit these retail investors in hard. They would really hate it, and they would think twice about doing it again. Secondly, you could use the money to buy a lithium mine in Texas, and that would stop all the criticising about how is it environmentally friendly when you're having your lithium shipped from halfway across the world. He could buy a nickel mine, protect himself against rising nickel prices. He could use the money to set up more charging points, more service points. But you've got to remember, having gigafactories is not enough. In 2012, I bought an EV car. I had the choice of a Tesla and I didn't buy it. You want to know why? Some people criticise me for that, but I didn't make a mistake. A Tesla was 7 times the price of my EV car, and at the time a Tesla didn't do anything different. The other thing is, there was no Tesla supercharging points anywhere where I was. I think there was one, and that was at the dealership. They need to, if they want to crack the UK, they put more in the UK now, but if they want to crack the UK, they have to put a hell of a lot more. And it's the same with every country they're going in. And once they've done it in every country they've done it, they want to crack it. Because the big selling point for the likes of Nissan and all the other EV cars is we have so many charging points around the place, so you don't have to worry about it. So once they've done that, then they need to put more charging points in America. Because if you're going to build and sell as many Teslas as you think you are, then sorry about that, then you are going to need more charging points. Otherwise people are going to be thinking an hour wait just to get to the charging point, then I've got to charge it for another hour, sorry, I've got an hour wait for a charging point, then I've got to charge it, and then I'm getting abuse from someone else to hurry up, or it's going to be a waste of time. Then you'll see where I'm going with this. If you're going into Tesla, you have to realise that, like with Microsoft, you remember I did the video on Microsoft, Tesla and Apple. They had 15 years of growth with the share price being flat. You will have that with Tesla and Apple. People are assuming that Apple are going to rise with a 5G phone. That's factored in at the moment. Now, I wanted to scoop up some Apple because I think they had a lot of potential, but then it just went too high for me. It wasn't worth me taking the chance. Now, I'm in Google, I'm in Amazon, I'm in Tesla. I'm in Facebook. I won't be in Netflix because I think that's going to go downhill. They've got great subscription numbers because of the pandemic, but I think they've got too many companies going into it now. Look at Disney Plus at the moment. I use Disney Plus. I think it's great. Now you have Amazon Prime, not so great, but it's still, when you think everything you get with it, it's good enough. You have AT&T's service, HBO Max. You've even got Genius Brands. Now I know that's not but coming in to say you've got like loads of different streaming services. You've got Roku, but the fact is, Netflix was innovative when they first came into it. They're not anymore. Even AMC Theatres have signed a deal with Universal where they get a percentage. So I think they're the one FANG stock I wouldn't own. Anyway, please leave a comment in the box below. Don't forget to hit the like button. It really does help with the YouTube algorithm. Sorry I didn't get to speak about GEVO. Do an update on GEVO. I will do later. My time is limited. I'm sorry again about any background noise. I will speak to you later. I'll make sure I do a video later. Anyway, remember, stay safe, stay savvy, stay invested, and goodbye.